Hello, this is Cryptolyze. I hope you are well. This Thursday, 16 November 2023. It is with pleasure that we meet today to talk BTC, to talk crypto, to talk news, to talk technical analysis, and it starts right away. As a reminder, you always have the possibility of having free access to the educational course, which is a 60-hour training worth €400, which allows you to learn blockchain, crypto, investment, analysis technique, trading, everything to become profitable. Through 130 videos, 400 pages of guides, quizzes to find out where you are in your progress, and all for free. To have access to this lifelong training, simply use the platform of one of our partners. Everything is explained in the comments and descriptions. We will start the news right away with that of the SEC, which decided to delay the validation or refusal, in any case its decision on #X Bitcoin ETF therefore, which was a spot ETF and also the future ETF of Grayscale. Therefore, very important in this case, the deadline for the decision was November 17, and in this case the day before they decided to do it on 15, not the day before in order to be able to do it. So here we have in fact the stopping of the hypothesis which existed of the validation between the 9 and the 17 of all the ETFs, which was the moment in which all the ETFs could be validated together. So this implies that it is now postponed to this end of year, extreme end of year, or even beginning of year 2024, or even really first week, second week of January. So something which would be relatively close. So which is the next date to watch, even if I tend to tell you that I think it will certainly be a little bit further away, so Q1 2024, and potentially in March. Then we still have a densification of the legislation around cryptos, so we know that we have regulations that are in progress. In terms of cryptos, we also know that we have a whole form of communication around the use of cryptos. Cryptos for the financing of Hamas, which is usually rather classic, terrorism, money laundering, we are almost always in this idea. And alongside we have communications from the CFTC, for example, which explain that as soon as they open a new door, it is FTX-like. So implicitly, we have just finished the judgment of SBF. We have just finished more or less what is happening at the level of FTX. And he tells us that there is absolutely nothing that has changed on this side and that we could very well have once again a new FTX implied. We need an increase in regulation. So it risks doing relatively badly, especially when we start looking at the regulations that are coming, particularly in New York, which reduce the possibilities of filing cryptos. And even to be frank, it's really very complicated at the moment with the new regulations. Hence, to actually file a crypto listing when you are in a New York state. So we still have a form of tension that is being created around crypto regulations, which is at the same time rather logical when we arrive at the end of the year with the addition of November 16th. So we arrive in this post-FTX period where there were a lot of difficulties. We have just finished the trial, so it is logical that we have a tightening around cryptos, or in any case, a resurgence of this regulation and this demand for increase in regulation. Besides, we had figures yesterday which were rather consistent, in which we had a production price for October which decreased, which was more of a minus 0.5, which was really interesting. Which clearly shows that we potentially have an impact on the American economy on the increase in rates. So that means that we are heading in the right direction. The question is, will we enter a recession in the USA to be on the right track or not? Namely that we will have the manufactured index from the Philadelphia Fed in November, so very important too. This today, 1430, will certainly be scrutinized. Scrutinized, yes, but we are in a hyper-buying zone at the level of the S&P 500. So what's interesting is we're really struggling here in the 4,500, so that's really the key level, I think. If we ever break it and really consolidate above it, if we close a weekly one above that, and if we manage to consolidate the following weekly, that means we risk to start loud and strong. So there we will have a new dynamic. I think we will talk about that in all cases in the weekly, not necessarily that of this week, but that of at least next week. What should be noted above all is that we broke the bearish divergence that we had already had for some time. The break, and in particular this acceleration here, in fact, led to a modification of the RSI with a passage and a reversal of this bearish divergence that we have already been dragging on for a relatively long time, since September or even August, in which we saw the first bearish impulse and the rather classic retest, On this, we are simply dragging on all this momentum there. So there we have this inversion, which is rather positive, which in fact potentially gives breathing room to the S&P 500 to close above the 4,500 and consolidate to be able to start again. Namely that we have a dollar which caused us a very big fall yesterday, so the day before yesterday, Tuesday 14 November, in which we went to break the big supports. First support in which we had a nice reaction, in which we were potentially consolidating above to start again, or in any case setting up a range above. Here we are in the process of invalidating. We will wait for the weekly close as usual. But in all case, we are in the process of consolidating on the second support. If this one, on the other hand, breaks, that means that we are going to look much lower. We are going to look for the 102 to potentially look for the 100, and therefore go and do a spring retest, which would not necessarily be positive precisely for this nice accumulation of coffers that we had to have a dollar. An increase in the dollar a little stronger to put pressure. On the other hand, the fact of having here a liberation of dollars also implies that we are in the process of having a liberation. In terms of the interest rates of the American debt, because inevitably if we no longer have need for the dollar to buy debt, at that point, we will actually reduce our exposure to the dollar, which is rather classic. And therefore we will reduce tensions at the level of this index. Therefore, the DXY. In terms of BTC, we had a short week there which was quite interesting, in the sense that we have this representation of a candle in which we completely swallowed the bearish breakout that we had. Yesterday, in a single day, in not even a few hours. Last night, it was quite dazzling where we made this bullish break, with a very big candle. Then after we consolidated, we are in the process of consolidating above, in which we went to get the liquidity from this part. Very important liquidity. We will discuss it a little later. We will just take a little step back to confirm that we are still in this role. Here. Okay. In which we have here bullish acceleration, which we find here, then a pattern in which we are working the price. We are working the price. We are making a bearish breakout. Then we have a re-acceleration, in which, on the other hand, the re-acceleration I expected it to be a little stronger. Is it going to be finished? Or are we going to consolidate above? That will be to be determined. In any case, we have our bearish divergence at the level of the RSI, which is in the process of being validated, particularly on a daily basis where we see that we are in the process of passing below the 70 bar, below the overbought bar, so this implies that we are potentially validating this divergence there. We can drag it out for a long time. We can very well still have a bullish re-acceleration, which is important to note. CE is that yes, we went to look for liquidity. But what is especially important to note is that we still have no increase in open interest, so that implies that we do not has no leverage. We have no aggressiveness at the market level, something which is also being validated at the CVD level where we see that we have a small acceleration in CVD, but it remains very weak. We are very far from the acceleration that we were able to experience in this area. So for me, we are really in a loss of momentum of aggressiveness of the market. So that still confirms the bias that I have already had for a certain time to have the possibility to have done a retest. Namely that we went to look for equity at the bottom, yes, but we did not go for big liquidity, and that's why the acceleration too. I spoke to you about it. But for me, I thought we were going to look a little lower. That we were going to look in particular for the equity, which is at 34,000, with all this block of liquidity, which is relatively substantial, which is even very, very substantial. When we look at Kingfisher and we really look at the liquidity pool, we see that the 34,000 were important, but are exceeded by what we are seeing at the level of the 35, in which we have a reinforcement of acceleration with precisely a redemption of the wick which took place, and therefore a positioning of people to accelerate upwards. So for me, I still remain in this dynamic in which we have a form of weakening of the bullish momentum, and which is rather logical. At the same time, because as a reminder, the bullish momentum was pushed by rumors around the validation of the ETF, rumors which have stopped for the moment, in which we are even starting to have rumors of rumors saying that potentially the validation will not take place right away. On the other hand, I am not saying that we must short. I am not saying that the flow is bearish. Far from it, we are on a bullish flow in which we are in the process of consolidating above the whole part here, of work that had taken place. So if we ever have a consolidation above 37,200, we could say to ourselves, which is really the classic level here, in which we could have that, at that point we could continue to push, even have a form of grinding of this style, before having a break too, because I think that if we break the 38,000 here, we will have an acceleration, okay? We will have a big liquidation candle, because people will try to short this level. And will certainly get liquidated as usual, and we will have a new short squeeze there once again. Although we have quite a few open interests, there are quite a few open interests present. So we are taking a little step back from that. For me, it is that we still find ourselves in a decrease in stable coins. So that is the representation. the dominance of stablecoins, in any case of the main stablecoins compared to all cryptos, we see that ON is still falling, which is rather positive. This means that in fact, people who had stablecoins are investing in crypto, which is rather positive. On the other hand, which is not positive, it also implies that we are not seeing the arrival of new stablecoins on the market. This means that at the moment, we do not have sufficient stablecoin inflow to be able to remain either at the level of the percentage of stablecoins on the market or to increase. Why not? Which would have been interesting. It would have been an increase in stablecoins, and behind it, an increase in prices on all cryptos. This meant that we had an inflow which was relatively important, or in any case, a stabilization of the inflow, and precisely that the transit of stablecoins was mainly in crypto. There we unfortunately have no inflow. We do have a transit of liquidity, but we do not have an injection of external liquidity, something that I have explained to you already for some time, and which for me is a warning sign, in fact, that we will have to monitor. Do we have a bull run or not? It will be a stabilization for me of the stable coins or even an increase. Why not? And then evaluation of the price or during evaluation of the price of the all cryptos. There we will have a general valuation of the ecosystem. Note that if we look at Ethereum versus BTC, which is a very important chart in which we generally have the signal of the high season, although we see that we have an outperformance and finally an increase in the dominance of altcoins in general compared to BTC, that does not prevent us from having a chart which is a little complicated. We cannot take off normally when we are on a support zone like that with a candle. We should have actually pull out to at least get a retest of this level. That's not the case, okay? So there we have a sign of weakness. I think we will wait until the close of this week, but that will really validate the sign of weakness, to potentially have another small acceleration before having at least a retest of this zone there, or even potentially a breakout. Don't forget my target would be a little lower. Once again, if we manage to do it, so much the better. If we don't succeed, it doesn't matter. We will be working on the support. But for me there, I don't have a sign of vigor. I don't have a sign of strength, and we must take it into consideration, especially as we approach the end of the year as usual. Don't forget that the month of December is always a little complicated in terms of volume, so we will have something which will be relatively flat, and I would like either to consolidate above or to consolidate below before this flat period so as to make sense for this beginning, 2024. If so, leave me a like and a comment. It supports what I do, and it makes me extremely happy. And we meet 13:30 to talk about Ethereum.